Top 20 stocks to invest for the next 20 years. Now, on this channel, we advocate long-term investing, correct? So that's why I've curated this special list of 20 names. And in today's list, we'll be covering name number 15 all the way to name number 20. And within it, there's someone that produces this. So if you're keen to find out, continue watching on. Hi guys, welcome back. You guys know the drill. We'll be running through the criteria first, just in case you are new to this whole series. I'll first run through the criteria. If you haven't heard of it, the reasons for choosing them on this list are as follows. The first is that the company has a long history. Now, we're going to invest for the next 20 years, correct? We're not going to pull startups or even listed companies with less than 10 years of history. Heck, they haven't even seen through, the previous global financial crisis. So in this list, these companies have been through recessions. These companies have been through depressions. And many of them have even been through war times. Now, you definitely won't be seeing names such as Lululemon or Crocs, although Crocs is doing well in terms of share price right now, simply because these companies or these brands are subjected to a change in customer taste. So in my view, the moat is weak because again, we are investing for 20 years. We want companies whose brands are so entrenched in our everyday lives, or they are so fundamental to how our society actually works. The second is if we were to be able to choose a company, we want one that's already been through multiple successes, which means the CEO currently is not the founder. And there are strong reasons why. Back then when Steve Jobs first ran Apple, Apple did very well in the initial phase. But there are definitely maturing pains, even for Steve Jobs. If you look back at history, there are going to be changes. And not every company that's been through a change was as fortunate as Apple. Just a small tip again, Apple is definitely on this list. But who is not on this list are quite obvious. First, Tesla. I know this is going to upset many of you guys because the fan base for Tesla is strong. I understand that they are delivering big value. But again, in terms of 20 years, we don't know what will happen to current founder Elon Musk. If you compare that to, again, Apple, who has been through multiple successes, you know that if CEO is no longer there, there is a good succession plan to things. Fair enough? You will also not see Meta. Meta is still helmed by Mark Zuckerberg. Now, you may or may not agree with this whole criteria, but it's better to have a criteria than not. So in terms of the business, I'll much rather prefer B2B businesses than B2C businesses, because B2C, there can be fickleness in terms of consumer trends, but B2B, the disruption phase is typically slower. In terms of disruption, that leads to point number 4. If there was a name between a tech and a non-tech one, I would lean towards the non-tech one, simply because tech is where the brightest people are. We should expect disruption to come most naturally over there. Tech is undoubtedly the space where there is fastest growth. But again, this list is one that you can invest for 20 years, sleeping sound, because you know these companies are very entrenched and that the business mode is very strong. So notable absentees because of this criteria will include Palo Alto, for example. Palo Alto was an early bird in cybersecurity, but because the tech space is so fast evolving, that criteria will put it out of this list. You also see notable absentees such as Visa and MasterCard because they belong to digital payments space. I do understand they do more than digital payments, but if we were to envision a future in 10 years time with blockchains that payments wise is drastically different, I guess these two companies might be challenged. The fifth criteria is it's best if it's non-energy related because the world is moving towards a non-carbon phase, which means notable absentees would include ExxonMobil, even though they have a fantastic track record and have been in business for a very long time. And last but not least, if they have been mentioned as a dividend aristocrat before, they get a big plus. So let's factor in these 7 criteria because again, when we make a list, we need a basis. You may agree or disagree, it's fine. But this is a good learning process and a good thinking as to what companies will definitely survive the test of time. As Warren Buffett has always said, time is a friend of a good company and an enemy of a poor company. And without further ado, let's dive on to number 20 on today's list, which is Lockheed Martin. Lockheed Martin is undoubtedly one of the youngest companies. How young? Since 1912. So all these companies that we're listening have all got a very rich history. But where it really scores well is its core business, which is in defense and satellite. Now, war would definitely still be around in 20 years' time, in one form or another. There has never been an absolute war-free world peace period. Let's not be naive about it. So such companies are very resilient simply because every country needs to spend on defense. Lockheed Martin benefits when US increases its defense budget. It primarily does aeronautics. It also has a foothold in space, simply because satellite technology is integrated with world defense right now. This article really shows where it benefits from. Lockheed Martin has won big Javelin missile contracts simply because there's a war happening right now in Ukraine. In terms of its dividend history, it shows a very strong track record. And this is a space whereby not any startup can easily enter. It's a highly secure space. The business mode is very strong, and that's why I believe they'll still be around in 20 years' time. Let's move on to number 19 on the list, which is somebody that you can invest for 20 years because they've been around for more than 150 years. This company is in finance and one of the biggest. You can even claim it to be too big to fail. The name I'm thinking about is none other than JPMorgan Chase. JPMorgan Chase has survived the test in global financial crisis 2008. And if you think about it, the amount of power it wields in the finance space is unprecedented. There's only another company that probably comes close to it. Let's not give it away. But let's look in terms of where they actually build revenue. They have businesses in investment banking. For example, a company wants to get listed. This is an arm whereby it makes profits. It also has consumer and community banking. It also manages assets and wealth management. In terms of dividend history, JPMorgan Chase has been stellar. It has steadily increased its dividends across the years, as you can see in this chart over here. And even till today, it has further increased that dividend payout. Right now, JPMorgan Chase pays about $4 worth of dividends per share, and it's about 3.5% in terms of dividend yield as of this time of filming. It pays its dividends on a quarterly basis. And the only thing not to like about it is in finance, there is always a reliance on risk management because a company can become too over-leveraged or it can become insolvent if it has too much bad debt. But if these two risks are well controlled, you can expect JPMorgan Chase to still be thriving in 20 years' time regardless of how our financial world actually changes. Number 18 on the list is a company that produces all the core materials that you need to build buildings and stuff. It is one of, if not the biggest, mining company in the world. Who is it? It is none other than BHP Group. BHP Group actually mines all across the world. And what it sells is actually copper, iron ore, nickel, coal, and also potash. These are raw materials needed in industrialization. So regardless of whether we travel to space or not, we still need raw material and it's still very likely to be dug out from Earth. What not to like about BHP Group is that it is capital intensive. It is highly cyclical. But having said that, these are also factors as to why there's no new startup that's going to be challenging their business. When you want to mine in a particular country, you need licenses, you need relationships. And because of that, you can expect them to be around even in 20 years' time and delivering huge dividends to you. As of now, it is a high cycle in the commodity space. That is why dividend yield now is 13% plus. But also do note, because it's cyclical, this dividend yield would also drop in a low cycle. If you are willing to ride out for 20 years' time, you can bet that BHP Group will be bigger than what it is right now. Now, we've covered quite a few industries, and number 17 on today's list is in an industry that has benefited massively from the whole COVID-19 pandemic. This company was one of the first to produce an oral antiviral pill. Do you know what is it? It is none other than Merck. Now, Merck produces a diverse range of medicines and drugs. The COVID-19 pill is just a small component of its total revenue streams. If you'd like to know what is its key revenue stream, this is the drug that produces the most profits for it, Keytruda. Keytruda is one of the top selling drugs in the world, and what it exactly treats can be shown in this screenshot over here. The simple fact is that when you produce a drug, you have a patent that lasts for years, correct? And that's where its mode actually comes in. Pharmaceutical companies, of which one more will be covered in this list, so continue to smash the like button and continue to smash subscribe if you want to get notified of who else is in this top 20 list that's also in the pharmaceutical business. Medicines and drugs will still be around in 20 years' time, and who are producing those are still going to be these few big names. If you see the dividend payouts, you realize that it's been climbing steadily across the years, correct? And if you are looking for long-term sustainable dividends, I think Merck is definitely a candidate to look into. Let's go to number 16 on this list, which is what I actually pulled up just now. This company produces Kleenex. Any idea who is it? It is none other than Kimberly. Kimberly Clark has been around for more than 150 years or so, and what it produces, I'm sure you have definitely seen them before, simply because they impact more than a quarter of the world's populations with its products. It can be Kleenex, it can be Scott, you name it, you go to the kitchen, very likely you might see something that they have produced or are using on a day-to-day basis. If you look in terms of where they derive revenues, you will see that they make monies in personal care and consumer tissue. Now, where they actually extract this whole beautiful chart is none other than from Moomu's platform, who is today's sponsor. Moomu has a lot of tools for you to get invested, and if you would like to invest into any of the companies I mentioned that are listed in US, Moomu is definitely a platform to look at. They charge $0 in terms of commissions, and the user interface is extremely easy to use. If you are a new sign up right now, they also have a promotion whereby you can get a free stock, and if you put $100 into any of their Cash Plus funds, you also get $2 worth of daily vouchers for 30 days. That means $60 free. So without further ado, let me invite you to check out Moomu's platform and use my referral links below if you'd like to sign up today. I do post some articles there also myself, and you can usually look for me as a creator within it. And with that, let's dive back to Kimberly Clark. Kimberly Clark's dividend payouts have been increasing also. This is a year-on-year dividend rate increment. Not that dividends have gone up and come down, it's an increment rate. Now that is beautiful, and quite simply how it's achieved, because if tissue paper prices go up by 20 cents, we still have to buy it. That is the beauty of investing in companies like these. And if you think about it, there's no top scholar right now that is looking to disrupt the tissue paper industry too much. So you can sleep sound on it, and you can bet that in 20 years time, the company will be worth a lot more than today. Now before we get to number 15 on today's list, let me again invite you to smash on like and press on subscribe, especially if you want to stay tuned for the rest of the list from number 1 to number 14. You may be thinking, where's your favorite name such as Alphabet? I can give you a quick glimpse. It's in number 11 to number 14. Not in the top 10, and I'll justify why also. There's another company that you may like, and that is Apple. Apple is among the top. I can give you a glimpse of it also. So again, do smash or subscribe, stay tuned for it. I'll give you some insights as to why I think the modes are different for these companies. So let's dive back to number 15 on today's list, which is Abbott Laboratories. You may have seen their building before. You may have seen their products before. The simplest one to identify with is their milk powder. Enfragro and Similac are among its key products that are sold in Singapore. And I believe many parents are big fans and big users of these brands. However, Abbott actually makes more money from its other businesses, such as in diagnostics and in medical devices. These are business arms that will benefit for long-term R&D, disease prevention, because COVID-19 has taught us that our world is so vulnerable to diseases and pandemics. So these are arms that are actually very stable, and they add on to the cash flow that is produced on top of consumer goods. Abbott is one of the top names as a dividend aristocrat. If you see in this chart over here, you realize that the dividends have been growing year on year. The big change was in 2013 where they did a stock split. So if you invest into Abbott as a dividend investor, you can sleep safe and sound because you know the business mode is very strong, and they have definitely been a consistent dividend payer. So hope you like the list I've compiled so far, and as always, leave suggestions who you think should be the top 1, 2, 3 in the comment sections below. I'll be keen to hear from you also as I formulate the remaining on the list itself. And with that, thank you for watching till here. Check out the previous videos I've done relating to this subject of dividend and investing. And maybe with that, you can get more insights on what to invest into. With that, I sign off. Take care and goodbye.